Okay, so this is midday for July 13th, 2017, where we review midday chart setups. Just going to turn down my volume here. If I just messed anything up with the mic, please let me know. Okay, I must be good. Yep, still smoking. Gonna quit soon. Don't start. Okay, here we go. So, good news first, AAOI. So that's set up. As soon as we have a chart here, we'll talk about it. There it is. Well, first, what I want to say is I'm learning. You always learn, that's the cool part about the markets, but I'm learning that as the day trades, over lunch I looked through my day trades. Now, even though my first quarter day trades beat my swing trade P&L, I don't think my second quarter did. My second quarter will be out right away. Where I'm going is that Matt was commenting to 6 months, the day trading has been tough, getting those extra legs. I looked back and my day trading changed almost. My last really good sessions, like really good, like I used to hit huge home runs going back to December 2015 through to February 2016. Those 3 months were good. So that was LEU hit big there, Kelly's deal hit big there, some other stuff that hit really big. Structurally, there was better plays on the day trades. So it's not just me. The type of trades have changed pretty consistently since then. So why, I'm not too sure. It might be that a lot of the swings lately, I've noticed, like the last quarter, I had a much harder time with return on my ROI than I did the first quarter. So my challenge is I need to, at minimum, bring home 100% a year. The goal is for 300% a year, and that's in each category. So in day trading, in swing trading, and in algorithmic modeling. Normally, 100's not difficult. And if you get to 300, it's because you get some really nice moves somewhere, where you can start to really leg in. Like when things get consistent and, you'll see me really, 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 hammer down. But anyway, the day trades have been different. The type of stuff that's running isn't suitable for what I like. So the whole purpose of saying all that is, what I'm learning right now is these swing trades. I was looking at them, and number one, the ones that aren't working, which are few and far between, but the ones that aren't working are because I took a trade outside of the trading process that we're working with. Well, there's 4 or 5 that I use. There's one primary one, and then there's 3 or 4 others. But the ones very consistently that didn't work, the ones that I am a little underwater on, I got outside of the trading process consistently. So that was one interesting thing. And then the other thing was, and anything I'm underwater on, I'm not much. They're usually smaller plays and that kind of thing. Pardon me. But really, if you think about it, I was outside playing with the dog there, so I'm a little winded. But the important part is that if you take those swing trades that are set up properly through a trading process, and you bring them down on a day trade level on the 5, 15, 3 minute, 30 minute, there's no reason you shouldn't be able to day trade those fairly consistently to hit 100% a year. So that's what I did over lunch. I looked through those charts in great depth, and it tells me my gut feeling on that is right. So I think you'll see me much more focused towards those swings and bringing them down on lower time frames. Okay, well, while we take the winded Kurt and put out a cigarette, and you know that like last night I went deep last night for 2 hours, and I had motion sickness all night, and today even still, which I didn't know could happen from diving. But my point is, wow, you know, does that get you into shape? That's like jogging, very similar. Okay, let's go into good news. So AAOI, daily. I only burnt 6 minutes today. Getting better every day. So let's get the daily out here. So AAOI is basically turning into a trending stock. So its setup started back here some time ago, late 2016. So that'd be late August. It regained its 200. And it never did come back and test the 200, which is the ideal scenario, but it did get to the 50. But what you've got to do is you've got to watch when it gets Momo off of one of the MAs, you got to get back in. Now you got to trust the system. In this particular instance, it came back to the 100, which would have freaked me out if I was sitting in it. So I might have, you know, if I was managing my trades properly, I would be trading once you're in. So you're in here at say 2120. You're up at 27. On the hourly or on the 30-minute, all the indicators start to turn against you. And for each stock, it's going to be different. So you've got to study it. Is it the 30-minute, the hourly, the 2-hour, the 4-hour? At what point is it consistent that when the indicators turn, that they're turned for the downturn? Pardon me, sorry about that. So I hope that makes sense. So you enter on the daily or the weekly, and you exit the tops on the hourly typically, because your indicators are turned down. But don't just take that day's indicators. You got to study your chart. So you go to each day. Anyway, so it came back to the 100, got a really nice pop there, which makes sense because that's the spring. Like it came back farther than it should have. I would think something must have been going on there that, you know, the markets probably weren't happy or whatever for that week. So it sprang back heavy. So it sprang from 22 to 33 very quickly. And that's why this is so powerful, because if you actually get good at getting in at the 200, getting out at the top at this first leg, getting in when it springs back, getting out at the top of that leg, getting in when it springs back. And then here, this would have been a little tricky because it bounced off the 20, but still, whichever MA it bounces off, you go. Fantastic lift there. You know, $30 to, well, 56, almost a double in there. So that was this big one coming out of the bowl, obviously. So you're 1, 2, 3-ish, 4-ish, 5-ish in. And then I start to see the 5-ish because, you know, at the 5 or 6-ish, it's going to typically come off, and it's going to typically consolidate. And at that turn, which is where I recently entered, is where your next opportunity is, at the next turn. And hope that it comes out of its bowl there and shoots up like it did here. So that was executed perfectly. Today my day trade wasn't executed perfectly, but so this is the setup. This is textbook. This is as textbook as it gets. The only thing that could be better about this play is that every time it came down, like say the big down here, the stock RSI was coming down, the MACD was coming down, your squeeze momentum came down. The only thing that would be better than that is if these indicators still go up while price is going down, or vice versa, sorry. So price is going up, which is what happened here. Look at that. Price was going up and your MACD was going down. So when you see that, right after that it came off. Let's see how this one was. Yeah, that one was responding properly. The point is you want to find divergence. So if your price is going up and your stock RSI, here it is, here's divergence. But in each case, you got to study the chart, right? You got to figure out the history. The history of charts is very important. So this one is divergent in its divergence. In other words, it fell off both times shortly after its divergence. So you want to look at those things. You want to, you look at all your history. The point is that if you get, forget being divergent in its divergence. If you get price going up, stock RSI coming down, that's the most bullish signal you can get. Another bullish signal in here is right here. As soon as my computer cooperates. So when the 20 comes down, so it's in the right setup, the 20 comes underneath the 50, price holds in that little bowl and then pops. Now if you look at, if we take the lift that I got from that point, you see it? So look at the lift it got, 44 to, almost a double. So whenever you see that setup, or opposite is very bearish, it's advantage bears. So you flip it the other way and that's time to get out of a stock, or at least start to trim, like right here. So it happened here a little bit. It was very calm and it did come off. So that's the ideal textbook setup. There's some interesting divergence in there. There's a very bullish scenario here. There's but a mildly bearish scenario there. And consolidation here after 5 or 6 legs in. And then the trade worked, and then it did get over and outside of this bowl. And now it's up into its highs, all-time highs or 52-week highs. I haven't looked at the all-timers, but so it's way up over its 52-week. So textbook. So that's the review of the trade that you want to find. Okay, so what I'm going to do really quick, because we have the master class coming up next week, is I'm going to master class chart for bullish, bearish, indicators, divergence, setup, etc. So we're going to rip that one apart. We should also look at day trading ranges and see what kind of return we can get on those. Category, chart patterns. Sorry about all the noise here on my mic today. Wow, he played me out there. Bulldog's a tough dog. Okay. Oh, did I make that? Oh, whatever. Doesn't matter. Right ear sidewinder. Yep, that's what they call them. That's what Norm, my trainer, called it. YUMA. YUMA. The penny runners. I'm keeping the chart up because I might hit it here today. You think I'd learned my lesson? They just haven't been running through their legs lately. But anyway, looking for that as support-ish. So what is that? 230. Okay. Oh, didn't YUMA gain its 200? It did. But didn't we figure out that it doesn't really care? Yeah, look and see, there's your bearish spaghetti mess. This is what makes it tough for me when people bring me charts and, you know, ideas, and like it's really tough on the fundamental people, because the fundamental people come to me with all their research and everything and say, look at that, I look at the chart and I go, oh. But, you know, the fundamentals eventually cycle in. But they're late to the party, I'll tell you that for sure. The majority of the time, not always. So yeah, YUMA. Actually, I'm going to kill it for now. I'll come back to it this afternoon if I day trade it. AAOI. Quick update on the dollar. The dollar's got some fairly significant divergent momentum here. For our members, just so you know, on the intraday, so if it was today and it got up over 96.02, that's pretty serious. If it gets up over, say, 96.06, 96.07, that becomes very serious to the upside. So anyway, that's the dollar for anybody that's interested, because it does affect markets. My allergies are going cuckoo because we're out in the grass rolling around and stuff. Okay, gold. So gold, for our members' general interest, our model has an important area of support at 1220.38. It lost it earlier today. I put out a tweet actually, and it makes me wonder if I should even do that, because it's like, you know. Anyway, and of course that was there way before this gets there. It's easy to draw that support after the fact. But my point is that it's lost it, and so this here is important, this diagonal fib that makes up a quadrant, or this horizontal gray line here. All of our models, the gray line, the horizontal gray lines are very important. The other colors here are just fib lines and stuff. So just so you know, so your resistance on gold's right in that 1220 to 1221.60 range. And then your support's down here in the 1208.83-ish range. It's got past its inverted apex here on the quad, so I don't expect a lot of action. Its time cycle completes here at 5 o'clock on the 17th. NVGS, so this is, Corey was playing this, I hear. Quarry Rock has a very exciting way of trading, because he's got so many different setups that he uses. He's just like mad setup toolkit. So it's got the 200 right now. For me, it's just not the right kind of trade. Now, who knows, it might hold the 200 longer, but I don't think it respects the 200. I think what it does is it's just, you know, starting to bottom. You know, it came under the 200 there, got over the 200 there a bit, got over it more there. I think it's just the 200 in the waves. The symmetry is nice, and the symmetry here is tightening up. So, you know, there's a double bottom there. So this is probably double bottomed. It doesn't mean that you're not going to get a great trade, because a double bottom on a consolidated chart has a fairly high probability to it, and that's probably, you know, I don't know if there was news or not, but that's probably why it's got so much momentum today. That's quite a spike. That's a divergent spike for sure. But it doesn't suit. So part of the lesson the lessons that I was reviewing with myself, lecturing myself over lunch, is why take the ones that don't fit? Because the ones that I do take, they win, right? The right ones, 99, you know, it's probably 97 to 99% win. So why not sit in the pocket of what wins, right? just like with our oil algo, right? Like whenever I go against the algo where I don't trust it, you know, I don't win what I could have won. I almost always win in oil, but you know, because it helps me get out of problems. Anyway, so this will probably be a good play though. Like if you're willing to babysit it and watch it really close over the 200, and when it comes off, you know, over the days and it tests the MAs, like here, right? Tests the 20, goes, tests the 20, gets under and goes, tests the 50, goes. It's a little funky, but anyway, I suspect it's double bottomed, and I suspect you're going to see before it stops 16 bucks, and then from there, I don't know if you would see much more than that. Where did I get that 16 from? It's 15.28. Oh, I see. Up one. No, up one's at 20. Yeah, I might see that. If I had to give you a 2017 guesstimate, it'd be 14.89. These time cycles couldn't get you anymore, I don't think, unless it went straight up, of course. August 24th to, yeah, so, you know, your time cycles are fairly long. They're 7 months. 4 to 7 months out before you hit peak. You know, so if you I guess you could get to that 20 if you charted it out and did your extensions. So somewhere between 14.5 and 20. But it'll, you know, I think there's a super high probability it's going to get at least to the first target, 14.5-ish. So it's NVGS, just not my style. You have to be really good to trade that kind of stock. YNDX. So YNDX is the same thing, same play. Up through the 200, comes back. So leg 1, leg 2, leg 3, and out of the bull, well, into the fill here, and out of the bull here where the big spike is. Tests, boom. Now the trick is, why did it stop there? Just a previous high, I guess. There might be a fib there too. But I don't think it's done. Now. Once again, it's too bad we didn't catch this earlier. Yeah, there's a fib there. Yeah. Do I watch it? It's not early enough. I mean, I could, but it's just not early enough, so I don't want to chase it. If I needed to play, I would work on it. Yeah, Norm's right ear sidewinder. So YNDX, CHKE. Now, we've been working with this one. This is a bottom play, I believe, a washout snapback. But I discounted it for a reason, and I can't remember why. Why did I discount it? It's up 16% on the day. Can we get charts working, please? Oh, yeah, grab the right mouse. Sorry, there's 6 on my desk. Okay. So it's working on its fill, and I missed it. I was on it. I was right there. So again, don't want to chase. YTEN trading 335, up 13.56% on the day. I don't think we charted this one. You know, I think, Trace, I got busy on that one. I can't remember. I'm going to try and get the videos out to the members for middays every night on email, but we're not going to be publishing them on a daily basis. Like, we'll be maybe once a week or a couple times a week kind of thing to the general public. So I'm sure it's on the video, but I just can't remember. This is a really terrible chart. It doesn't hold its 200. It doesn't hold its gains. It's got all kinds of little spiky crap in it. I mean, this is why people trade bios, because they get those spikes. But heavy babysitting, heavy duty babysitting. I mean, it might go now. It might be bottoming. It might be consolidating at the bottom. It's very, very, very possible. Just not my style. I like to be able to enter and not have to look on the swings and just know, right? It's fine. Like, if you do it that way, then you know, if the market's having a bad day or whatever, you don't even have to look, like literally. The only reason I look is because I'm obligated to others. ALDR. This is a mess. Again, another bottom play. You could wait for that MACD to cross up, and it looks like it's going to soon, and go for the gap fill, like the CHKE I just missed out on, because it's got good volume. You could trade through the MAs if you like, but again, something that has to be babysat, but it could be done. ZFGN 375. So, you know, I hope this isn't the theme of today, but it's very possible it is. These aren't bad charts. These are fine. They're just not A+++. I mean, they're B's and C's that I'm seeing here. Some worse. So daily, it respects the 200 to a point. Wow. See, they tried to get the fill here, it never came, the gap fill. Then it came here at a lower price. So it's a gap, fill, gap, fill, gap. And they kind of got the fill up here, but that's a long road. And then they finally got the fill here, and then it came off again. So, you know, is it going to go? Yeah, it's probably going to go. It's probably going to get its fill, you know, up here, 570 range. So again, you know, like, that's a C, D kind of play. Pixie. So this one we were looking at last week sometime. I think my issue with it was history. I think at the time I said, yeah, there it is. Yeah, history. Straight price action, close your eyes and go. Hope for the best, set a stop. That's Pixie. AAOI, we know the story there. CIE. So every time oil gets bounced, CIE gets bounced. So, you know, if you think about it this way, CIE is up 9% and oil's up 1.36%. So you know, you can look at CIE very similar to like an ETN, a leveraged ETN. It's just you know, it's a 5 times or a 4 times leveraged ETN. It's not, but I think you get the point. So I don't even have to look at it because it's just like UWT, just a little more leveraged, even though it's not. It's a stock. ETNs aren't stocks, by the way. Lens stock chart, 8.87%. Wow, oil's holding in that really heavy resistance zone. That's interesting. So lens, yuck. Like you can't even say that it's formation, consolidating. Can't say any of that. It's just a downdrift that hasn't stopped. People are playing the bottom, unless there was a little bit of news. ANY, I'm sure we looked at this one the last few days. Same thing. Now this is starting to level out on the bottom. Could you play it? For sure you could, yeah. Do I think the bottom's in? I don't think it's saying that yet, but it could be. I mean, it is starting to level out, there's no doubt. And it is starting to get closer to test the 200. I would use extreme caution, but it could be traded for sure. CWH, this is an oil play, I think. Oh, Camping World. So Camping World is, its founder is Labotus, I believe. He's the guy that's on TV. Yeah, it's Labotus's company. 3220, 871. Not for me. Yeah, it's just not for me. It's probably going to go here. It's a it's a C or D setup. It's tradable. It's probably going to go better, more. But at the same time, you're probably going to see it come off fairly soon too, and then go again. Just not highly probable. That's what it comes down to, is probabilities. I probably should have looked at it. Actually, I didn't have the time. I was going to say I should have looked at these right before lunch to see if they, if they actually fit. So here's another bottom play. Sad. In engineering. So yeah, those bios, man, they're tough. This respects the 200. This respects its MAs. This can be traded. So the question is, how do you trade it? Because of the way it's taken off above all its MAs except for the 200, unfortunately, until it gets to the 200 and up over the 200, there's not a lot you can do. All you can do is wait for a pullback to an MA, which will be the 50 likely. And if it starts to get jig, hit it. If it's just between, the 50 and the 200, at 5, it'd probably be 530, and the 200 at 573, you've got decent range in there. You got close to 10% range, and then you trim and see how it handles at 200, and then hammer down. So that's actually pretty tradable. That's early, but it's tradable. Just the way it respects Symmetry is a little difficult. It's choppy. Oh, it might be volume. The problem. Yeah, the problem is volume. That's why it's so choppy. Forget everything I just said. Well, not really. I mean, you could still do it, but way too choppy. Sorry, I should have looked at that volume. When you see that chop like that, that's volume. Liquidity issue. So NRG is a second day runner. Yeah. So you'll want to look up the 3-day rule. So tomorrow's day 3. You want to be cautious. Great play for those that were in it. I looked at it really close yesterday. So there's a lot of guys, and nothing wrong with the play because it works. It's just not as probable to win as the one that I've been working with you guys on, where we get up to the 200. Now, what it is it's the gap, right? The gap and go. So when you have this scenario in the gap, remember the 3-day rule. Once you get into 3 days, it's getting a little long in the tooth. But if it gaps the second day, you can almost be guaranteed that it's going to go again. So early in pre-market, you see it gap, you can be confident to hit this in pre-market. At the open, it depends on action, right? So you got to use your day trading skills. But if you see a second day gapper, probabilities are pretty high, quite high. And then you just got to find your way out of it by the end of the 3rd day at latest. Now, does it always mean? No. But so really, I shouldn't have missed that because I knew it. I was sitting on it, I was looking at it, and I knew it. And we should start working with some of these. They can be really good. So at 2035, that's decent, right? We might have seen 10% or so on that one. So I've got to remember to work with those a little bit, show you the mechanics of them. But they are risky because you're holding overnight. You're holding a gap overnight. When you hold a gap overnight, as long as you're set up to trade in pre-market after market hours, it's not so bad. And then it extends your day, and then you're not sleeping as well, and all that kind of fun stuff too. So it's not ideal relative to, right? If you can hit 100 to 300% with a nice, consistent, non-stressful way of doing it on your swings, and then take your swings and move them down to day trades and make another 100% a year, you're laughing, with very little stress. Why not? AOI, CIE, GEMP, I don't think we looked at that. Anyway, that's the way I'm starting to look at it. I've got an obligation to our fund for 100% a year with a target of 300 if possible, and everything else that we're doing, those are the targets. And I got to tell you, with those swing trades we've, been getting set up in, there's no reason you can't do the swings and the day trades and hit 300 a year. There's just no reason for it. You just didn't trust the system if you didn't get it. Unless you're, new at it and you're learning, that's different. So this came out of the bowl really strong. Last time it did though too. This is divergent. This is pretty strong stuff. So if you like these kind of plays, this chart is still got upside. The stock RSI's got upside. The MACD's got upside. The the play itself, in terms of the MAs, the volume, its price action, how's liquidity? Not the best, but it's not bad either. Wow, when it came out of its full bull there, Kapauza. Yeah, that's why 52-week highs, you always want to watch 52-week highs. Well, there's only so much time in the day. That's another play, right? 52-week highs. So we got the gappers, we got the 52-week highs. I got to remember these for masterclass. Let's write these down. 52-week highs. When I was trading full time, I'd always work the 52-week highs, and the gaps, and then the other 4 or 5. And then sometime we'll get Matt and Corey and different traders in here to run their, you know, maybe a daily or 2-hour masterclass on what they do. You know, something tight, so it doesn't take up their whole world in terms of time. RADA, R-A-D-A. So we've been looking at this one lately. I see light is on here. That's nice. That's one of my trades. I'm in that swing. I've had a number of people ask me lately, you don't know what swings you're in? When you can't remember what swings you're in day to day, you know that your system is okay. RADA, R-A-D-A. What a great trending stock. Comes up over the 200 and doesn't stop for months. Late May, mid-May. Fantastic. See, that's the thing, right? You get into the play over the 200, it leaves Earth, and if it doesn't come back, you just ride it. Why not? Textbook. Now it's about to get into its fill. So, you know, if you don't mind babysitting stocks, here's another one. See, these are actually pretty decent today. It's just that they have to be babysat. Your gap in here is, you know, to 350-ish. So you get up over 275. I mean, that's still. And considering the way it spiked last time it got up over the 200. Interesting. It just doesn't hold its gains. Yeah, so lots of B's and C's here today. PFNX, PPHM, and MX. Yeah, really early on this one. So it's bottom testing and then testing its 50. So super early. So isn't that interesting? So I don't know, those fit our primary setup. So this is very, 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 very bullish. So it's come up over the 200. It got its bullish bounce over the 200, so that's our play right there. Then it came back, tested the 20, gap down, failed. Tested the 50, failed. Almost got near the 100. Now this is super bullish. When it's running underneath the MA like that, stock RSI is going up at the time, MACD is going down, squeeze momentum's going up. You know, so this is a bearish signal. and it comes off like it should, bounces like it should, comes off like it should, and does that until the MAs start to straighten out. And as soon as the MAs start to straighten out, so the 20 gets through the 50 and about to get through the 100, boom. Oh, earnings in one day, careful. And it's got okay volume. And if earnings are okay, I say it leaves Earth. I say it's going to be good. So if you can babysit it, you'll see 590-ish, 575, 590, which isn't much relative. But then, you know, you could step up through these other resistance points too. So that's PPHM. So yeah, lots of B's and C's here today. So not bad, okay, for sure. What was that one that was on the board that I said was one of my swings? Did it just vaporize off the board? Could have, eh? Oh, light. I think I'm 90% sure I'm in it. And then we have MLP that came off 28% here. So this is why it's important when you do run into the days where the trades are setting up, the right trades are setting up, the ones you're looking for, that you settle right into the charts, you know, and take everything out of them that you can. Because of the rotations and the way things move in the markets. That's just kind of the nature of it. But so sometimes that's why you'll see me locked down like for a couple hours on mic and go through. And I don't know if you noticed, but on Friday was when I said I wanted to take the extra time, and I spent 2 hours. And I dug in on Friday because I could see it in some of those charts. And then the 2 that I entered hit big this week. So those little inflections, once you understand those little inflections and what to look for. So when Kurt's like, oh, I'm settled in for a couple hours here, a learning trader their ears should go up and, you know, say, hey, you know, there's a reason. There's got to be a reason. So the pineapple crew has been running for quite a while, and wowza, did it come off. It's a funny chart, just altogether funny. I just wouldn't trade it myself. Cala's off heavy. PRS, so a lot of these that have been running are off here. ADOM's been running, low floater. MYO has been running and it's off today. It's a low floater. Yeah, so that's the review there. As far as your stocks are concerned, I haven't looked. Oh. MEOH, NCR, and HRI. Okay, I'll get these loaded here. So, oh my, MEOH. So some of these stocks, how they, you know, it's like when you hear a song or you smell a scent or whatever, and you're like, oh, I remember that day so well. I'm going to show you. Let's see if we can go far enough back here. Can't remember how far back these go. So it was in It was right here. Yep, right there. I bought it. 2002. Yeah, $6. I reckon it was 606, 607. I was buying it in that spike. I got its 200. And it peaked up here at, that's funny, 70 some bucks. Anyway, I don't think it was MEOH back then. I think the ticker changed. I think it was METH. Oh, well, maybe not. Sorry. Okay. Memory lane. Daily. Weekly, it's under the 200, so caution there. Daily. So it's got a 200. Now, when it regains its 200, when the 200 is trending up, it's not as probable that you're going to get the, because it's all probabilities, right, that we work with, but it's still good. It's very bullish. It's just not as bullish. It depends on the scenario. Like if you've had the big down, it's just its first attempt. And that's really what you've got here is a first attempt. Well, you have a little attempt in there. But really it got its legs in here. So it's really not a first attempt. It looks like a first attempt, but it's not. That's a run. So its probabilities are lower than most. It's got heavy resistance there. So it's natural resistance. It's right where it's trading. Like that's heavy duty resistance. As you can see how it was heavy resistance here and how it was heavy support. Because all it is support turns into resistance, resistance turns into support. So you can see how the previous support mirrored the previous resistance. And then this resistance, you know, almost mirrored the support and resistance from previous. So I'd use caution here. I don't know if you're holding, but I'd use caution for sure. I'd wait for it to get up over. It is kind of over, but you got to be careful. It's where you know, at the end of the day where it closes. That's the important thing. But it does respect. It's got okay symmetry. It acts like it's a little bit thin, but I don't think it's a thin stock at all. Let's take a look here. Well, moderately thin anyway, it looks. Yeah. Yeah, I'd just be really cautious, but it gets up over that. And price is over the 20, so up over the resistance. Price is over the 200. Once price is over the MAs, it's over support. It's natural resistance and support, and the 20 and the 50 start coming through that 200. You're probably into another series of legs. MACD's good, squeeze is good, stock RSI is good, and volume's good. But oh, and you got earnings, so I'd be really cautious. Yeah. Yep. So it's a matter of points of decision. HRI. Man, that Methanex. It's funny. Those were back in the days of trading from the newspaper. Yeah, we used to trade from the newspaper. What? Yeah, we used telephones, you know, that were wired to the wall, and we looked at the newspaper. I still remember clearly the day I got a cell phone, walked into a restaurant, and some people were, you know, that guy's nuts. Some people are like, it's a practical joke. Some people are like, he's got to be, you know, severely handicapped. HRI. Wow, you guys, you ladies get into some of these really funky ones. You guys are digging through, like you guys have got some kind of methods of finding some really stuff that's motivated by fundamentals, not through the charts for sure. And then when you take those kind of plays and you bring them into an analysis, charting analysis environment, you know, it's funky because there's so much here. The first thing I think when I see this chart is I say bad management, not bad company management, bad promotional management, stock management. Whoever the promo team is in here, the promoter, they have a bad team. This is really, really messy. But it's messy. There's no symmetry at all. It's choppy. It doesn't respect anything except for when it tested the 200 right here. It doesn't have enough chart history. Stark RSI was diving. Yeah, that's the way that should have. So that all makes sense. You could trade this almost exclusively on the squeeze momentum indicator. It's the only thing that really trades well. Stark RSI does too. But the squeeze momentum indicator is dead on. Yeah. So this is definitely this stock is, without knowing anything about it, I can tell you that it is driven by sentiment. Sentiment, news, fundamentals, but sentiment is the one. Because as soon as that stock RSI lines up with something this funky, it tells you that you know, the bulls are, like, it's vicious. The bulls are in and out, so the squeeze momentum indicator is picking up on it. It's vicious. There's a little bit of symmetry on these spikes. So if that symmetry stayed, you know, you're getting near the top, but you're at serious resistance too. Very serious resistance. It doesn't get any more serious than that. What happened last time? Got to resistance. Well, you can't tell because it hasn't. Yeah, that's the problem there. Shoot. Now on the good side, MACD is trending up, and it has for some time. I have no idea what it bounced on. Oh, support right here. It did retest the next support and bounced off the 200. Ooh, the 20 is about to go through the 50. And prices above all its MAs. Ooh, what a setup. See, these are very vicious. This can go massive. You might get a double here now, like a double in terms of extension. So this is, yeah, this is just straight vicious. So what you do is you know, Sesame Street it. So there's your last extension, right? And yeah, I was kind of wondering when I did it because you got this in here. It makes your extension kind of tough, but anyway, it's going to be at least this. So that's one move. Oh, look, and it hits resistance. Interesting how that happens, eh? But there's your double. That's what I mean by your double. It's your double extension. That could very easily happen in this one. Depends what the bulls decide. Interesting. When I used to trade aggressively, and if I can babysit, I'd be all over this one. I'd be watching this one very, very close, because it gets through there, and I don't know what your short interest is, but those shorts are in deep trouble, and they'll panic fast. So what's your upside? 55 bucks. Oh, yeah, $5 on 50. Yeah, that's a decent move if you get it. I mean, it could even be more, right? If you don't get it, what's the worst scenario? You'll revisit the 100 down in here somewhere. So 42 or so, without, setting up the fibs. And then if the 100 didn't hold, then you're 200 in the, 41, 42 range, and then you're in trouble. So if you wanted to make it big or not, you could just hit it now, go full Krugerman, all in, sell all your houses, JD, and put a stop somewhere in around 42 1/4. But risk reward, and I'm joking with the all in. Cool chart though, very challenging. It's not that it's a bad chart. Funky ladies, did I say that? Wow. Yeah, I'm always loose with the lips. I talk before I think. Very bad. People get what's really there. Yeah, not that they're bad charts. They're just funky charts. Those have a lot of horsepower behind them. Both you and Tracy bring charts with a lot of horsepower behind them. It's just a matter of, hey, there's a new one on the board. Oh no, yeah. Why didn't I see Hertz? What am I missing? Hertz is up 12%. Darn it, I thought I had a trigger on that, or an alarm. Maybe I didn't put one on there. Yeah, it's not that they're bad charts. I mean, today there's been a bunch of B's and C's, a few D's, and then JDs with some horsepower behind them. Very similar to Tracy's stuff. They're not bad. It's just you got to babysit them, right? Hertz, darn it! Oh, I've missed most of the move here. Shoot! See, this is an early trade through the 200 to the 200. So I knew here. I watched that. That was too tight, and then I thought, wow, I got to catch the 50 to the 100. The 100 to the 200 is 1479 to. Well, that's decent too. That's nice width. Oh, but the gap fills here. Shoot! Wow, I blew that. I don't know why, but I did. I've traded Hertz so many times. It gap fills perfect. See, right here, gap fill, boom. So we get a gap fill on this one. No, this one failed. In fact, I think I was in this one. Yes, I was. This one did fail, but it went okay. This one's fantastic. It's probably bottoming right here. Very good probability. I know I'm calling that bottom early, but like there's no evidence in the chart other than divergence. That's probably it. I'd watch this one very, very close. It gets up around 200 and you're going to see some serious action. This could be bottom. You got here 36.88 to 52 late in a bottoming. I mean, almost a double, and it's late, like late in the bottoming. Like as you go further through, these get smaller, right? until you get to the bottom and then boom. And when it comes out to that bottom, its bowls are going to be huge. 1719 will be the first one, then 2370, then 36, 53, and 60. People will say, well, there's no way with the company the way it is right now. Forget that. Fundamentals are always late to the party. What it is the traders will trade it. If it's set up, they'll trade it. They'll take it. I mean, eventually the traders go, okay, that's enough, right? Is oil really worth $140 a barrel? Probably not. It's probably worth $12.36. Okay, sell it, right? That's what happens. So there you go. Beautiful. So you could trade it between the 100 and 200. Wait for it to firm up. Fantastic. Okay, any others? Hey, I didn't say I didn't like them. I never said that once. I gotta wait to get you guys on mic. Get your mics. Get back here with mics so you can actually have a real conversation so I'm not on the other side of the fishbowl. What else is going on? Oil. Rocking it. Any other charts there, ladies? By the way, where's Leanne? Is she still on vacation? May as well get all three of ganging up on me. Why not? I can get some guys in here to help me. And I have buttons I can push too. Don't forget that. Okay, no more charts. Well, it's 1:07. Hopefully we can get something going on the day here. I'm going to post a bunch of videos tonight because I haven't been posting them. Going forward, I'm going to be emailing the midday reviews to the members day one that we do the review so that members can take advantage of it that weren't in the room. And I'm going to delay them to the public to be mean and no, just to respect their membership. And then the other thing is that what was the other thing? So it's Thursday. I'd like to consolidate all these ones we've been watching because I know what's going to happen. We're going to look at the movers tomorrow or Monday or Tuesday. We're going to go, damn, we looked at all those. So, and what was that alarm earlier today? What was that alarm? Something alarmed. Triggered. Let's take a look. AOI. Oh yeah. Yay, AOI. Yesterday, BLFS and TRS. Oh, that's June 28th, July 12th. BLFS. Did we ever look at BLFS? Oh, let's look at it quick. BioLife. So it alarmed yesterday and it's up 5% today. Surprise, surprise. Did anybody get that? Darn it. Man, I wish I could babysit these. Oh, yeah. This one. Ugh. It's so bullish. That was the horns yesterday. That was it. We were looking at it right here. $3. $3.26. Oh well. You know what? Our some worse, and that's nothing. So yeah, that's the status. But I'd like to consolidate all these. So tomorrow's Friday. Last Friday we consolidated. Maybe I should just consolidate tomorrow and then Trace and whoever's away. Man, we got a lot of people away right now. Like a lot of people, more than half. Anyway, I'll do the consolidation tomorrow, hopefully, and then post it for the members. And then hopefully that'll set us up for the next week, like this week was set up. Yeah, that would be good. Any other questions? Okay, ladies and gents, that's the end of it for today. And so I'm going to hit the record button and stop. And yeah, let's see how it's set up. If it doesn't set up, I'm going to head out in about an hour, but I'll see how this next hour sets up. And then we'll do a big consolidation tomorrow. Thanks.